what's up you guys? It's Pepe Cedeño and welcome back to another video. I want to explain to you a little bit how Robinhood works. So my last video, I actually talked about how I'm investing into dividend companies and how I'm hoping to get, continued growth in my portfolio and just get money back by doing absolutely nothing. Well, let me explain to you how that works. Let me explain to you how investing in dividends in Robinhood, you will actually be getting money back, because at the same time you're like, what the hell, how am I getting money back by doing absolutely nothing? How does that work? Let me start with explaining how Robinhood works and what Robinhood exactly is. Robinhood is a broker app. You can actually do it on your phone, you can actually do it on the website. So why should you invest in Robinhood? Well, it's commission free. ETF stocks, REIT stocks, all types of stocks, it's commission free. And it also has options trading for free. When you're a first time investor, you're like, I don't know anything about stocks. What do I buy? What is stocks? What is dividends? And how do I even get started on Robinhood? Well, let me explain to you and let me give you my 5 best stocks to invest in under $100 and give you dividends back. So let me explain to you what these stocks are and the reason I love them so much. Well, 3 of these stocks are actually ETFs and 2 of the stocks are actually REIT stocks. Trading at $94, which is VYM. It's actually a Vanguard high dividend yield ETF. The reason I love VYM is because it actually gives you exposure to other companies. It gives you exposure to JP Morgan, Procter & Gamble, ExxonMobil, AT&T, Intel Corp, Verizon, and Wells Fargo, just to name a few. Just by having one share, you actually get exposure from all those companies. So those companies pay out and VYM will pay you out in 3 months. Another one that I really love is SCHD, which is Schwab US Dividend Equity. And this one has exposure into Intel, Home Depot, Coca-Cola, Exxon, Verizon, Procter & Gamble, Pepsi. This one's actually currently trading at $58.28. And those companies, when they pay out their dividends, you get a dividend back from SCHD. So you basically get exposure into those kind of companies, are actually companies that I personally like and companies that I don't personally want to just buy into because of the fact that they may be more expensive. And I don't want to just rely on one company. So I like to get my dividends from multiple companies and just get those kind of companies and so basically it's like I'm owning shares into those kind of companies without having direct exposure into them and without having that risk where I have to just put the money into them and just rely on them to make profits. So basically, that's the reason I like those. Another one that I like is SPYD. So I ended up buying into SPYD because of the fact that they get exposure from other companies in other areas of the spectrum. So I decided to buy them anyway because of the fact that it gives me, that one actually gives me around 45 cents a dividend back to me. And then the ticker symbol is SPYD, and it's trading around $39 a share. Those are my 3 ETFs that are actually trading under $100, because there's other ones, but they're trading at a higher dollar amounts. My 2 REIT stocks, Real Estate Investment Trust. I personally like NRZ. It's about mortgages, finances. It's a stock that gives you exposure into the real estate market. The price ticker symbol for this one is only $16 a share, approximately $16 a share. It fluctuates, but it doesn't really go up more than $16 a share, but it does give you 50-cent dividend back to you. So every 3 months, you'll be able to get a 50-cent dividend just by having this, just by being invested into $16 a share into NRZ. NRZ is a very, is one of my personal favorites and is one stock that one of my first stocks that I started owning about a year ago. And like I said, I really didn't know nothing about NRZ. Robinhood has a platform where it will actually tell you what analysts and financial analysts are actually rating the companies and rating the stocks. And NRZ, I happened to see that it was at around a 92% analyst rating, which means it was a 92% buy by analyst rating, and it actually was around $15, $15.84 a share. So I ended up buying a couple shares, and I ended up seeing that I was actually getting paid dividends, and I didn't understand exactly what dividends were at the time. But before I explain to you what dividends are, my last stock that I really love is IIPR, that's a ticker symbol for Innovative Industrial Properties, which was actually a cannabis real estate investment trust, which actually gives you exposure into the marijuana industry without the actual risk of having to own the stocks, into the rely on the actual marijuana stocks, because the fact that when you rely on the actual marijuana stocks, you're relying on that certain company to give you that growth, to be profitable and make those sales. Innovative Industrial Properties is actually a real estate facility which actually rents out and leases licenses to cannabis owners. It actually gets exposure into those kind of companies. So I love it because of the fact that Innovative Industrial Properties is actually trading at $77 a share. I ended up buying at $73 a share, so I was able to make a good profit. I bought 10 shares, and it's actually going to be paying me $10 back because Innovative Industrial Properties actually pays you a dividend of $1. So basically having that exposure, having that dollar back to me is amazing because of the fact that I'm getting $1 Innovative Industrial Properties and I'm not doing absolutely nothing. Now let me explain to you as to why. Let me explain as to what dividends are and exactly why dividends are so important and why the reason I love dividends. Well, dividends are, first of all, is when a company is profitable, when a company makes sales every quarter, companies will make their sales. Well, a little bit of their sales, a little bit of their profits will actually go to shareholders. So being a shareholder into a company, you actually get a little bit of their profit, and that's what a dividend is. It's a little bit of money back to you as a shareholder for just holding money into their shares, but buying into their company. And the fact that you get to grow your money at the same time, you get a dividend back. So that's what I love about dividend investing, because of the fact that you're not the one that's putting the effort into making sure the company is getting sales. You're making sure into the employees, your hiring process or anything. You're not involved in any way like that, because of the fact that you're actually just letting the CEO and all the employees do all the work for you. All you're doing is sitting back and getting your free dividends by doing absolutely nothing, and that's amazing because it's just free money back to you. It's free money without having to watch the market, without having to do anything. If you put your money into the market and you don't have time to watch it, I would definitely suggest if you know the ticker symbol that you want to go for, put your money into the options trading, buy that ticker at a lower level than what it's already trading, and just leave it there. If the market drops, I'll trigger a buy. Now again, that options trading is only, like again, Apple's trading at around $300, don't put it at a 120 and think that it's gonna just drop, because of the fact that for likelihood of Apple to dropping from $300 to $120 is very unlikely. But again, nothing's, something can happen, but at the same time it's very unlikely, so your $120 is going to sit there and not do anything because it's not going to buy into the Apple. I mean, what Robinhood does also offer is cash management. Cash management is actually very important because of the fact that by leaving your money into Robinhood, even Robinhood is actually, it's a new thing that's actually coming out with Robinhood. It's actually leaving your money into the Robinhood without even necessarily investing it. You'll actually get a 1.8 APY, annual percentage yield, just by leaving your money there. So most banks will give you 0.05 to 0.08 or something percent return back by leaving your money into your savings accounts or high yields and stuff like that. So you basically get a higher percentage by leaving your money into Robinhood and not even necessarily touching it at all. So if you leave your money with Robinhood, your interest rates, your dividends that you get by naturally just having your money into that Robinhood cash management is like a savings account with Robinhood, you'll definitely be getting a 1.8 percentage yield back to you, APY back to you. So that's actually something to look out. That's something to think about too, because of the fact that Robinhood actually gives you that. And the reason Robinhood is able to give you that is because Robinhood has different connections with other banks, and they actually be able to hold your money for the FDIC up to $250,000. That is just different ways to multiply your money. Another thing that Robinhood is actually bringing out in the near future, that's actually in the process of it, I'm actually currently on the wait list for cash management. I'm on the wait list for fractional shares. And what is exactly fractional shares? Fractional shares is actually where you can actually get exposure into, for example, Amazon or Tesla. Amazon, for example, it was just trading at like 1900 or 1800 a couple of days ago. So if I say I don't have 19 or 1800 dollars to buy into Amazon, I can actually buy a small percentage into that company. The way I would use fractional shares is by actually getting involved into dividend companies like Procter & Gamble, Johnson & Johnson, Pepsi companies that I may not be able to or may not have the money to buy one share. I can actually buy a fraction of that one share, but still, even if it's a fraction of that one share, I can still get a small percentage of dividend back to me because I own just a fraction of that. So that's actually something to think about, because of the fact that it's always very important to get money back. That's one of the things that I love. That's one of the things I want to be able to help you as an early investor, is how to get more return on your dollar, how to get more return on your money. See, the thing is, when you work hard for your money, you want to have more return on your money, and you want to be able to multiply your money and grow your wealth at a faster range than just leaving your money in the bank in a basic savings account or high yield account. You want to be able to grow it, and that's what I want to help you by doing, and that's what I want to take you on my journey and to my portfolio, and to seeing how my portfolio and how I'm able to grow my Robinhood account. I've been doing Robinhood dividend investing for about 6 months, but I've only been investing into it my 50% of my income for like the past month and a half. So I really haven't started again a lot, but little by little getting dividends and reinvesting my dividends and being able to just grow my portfolio like that, and just be able to like put money into it and options trading and different ways to see it. I've actually been able to, you know, thankfully grow my portfolio. As long as the market's doing really good, my portfolio continue to grow. But again, if I'm exposed into different ETFs that I personally, in my opinion, I personally love, because of the fact that you get exposure into different companies, you get exposure into different businesses that you don't necessarily have to worry about them, you know, going down in sales, or one not having a good sale, another one, you know, is fluctuating, and you don't want to have your portfolio going crazy up and down, and you're like, what the hell's going on with my money? This is how I personally like it, because of the fact that ETFs gives you that exposure and that gives you that dividend back. Now, the thing is with ETFs is that you're not going to have a big increase in your portfolio. So if you're like a crazy maniac like me, and you love seeing your portfolio just go up, rising, and you're like, oh my God, it's going up, rising. If you're getting excited about that, then have exposure into ETFs. I'm not telling you not to, but don't also have exposure into Apple, Microsoft, Intel, Home Depot, Johnson & Johnson, Procter & Gamble, companies like that. Now, again, those are my opinion. Get exposure into those companies if you want to, or companies that you know that you personally love. Now, when you want to invest into stocks, and you're like you want to buy into stocks, buy into companies that you personally love and personally enjoy. For example, you love Starbucks, go buy Starbucks because Starbucks gives you dividends. Why not?
Because you were putting money into to buy at Starbucks. Why not just, you know, own some of the company too? Just walk up in the light. What's up? I own the company. Give me my drink. Give me my latte. Something, or whatever the hell you drink.
Yeah, but like I said, I want to help you guys. I want to give you guys an idea and expose into organizations and companies to help you guys grow. So you guys, I hope you guys enjoy this video. And like I said, give me a thumbs up if you guys liked watching my video. And like I said, I will be leaving the Robinhood link below into my Robinhood account. If you want to sign up, you'll get a free stock. You'll get your first free stock from Robinhood just by signing up. Just by signing up, you already have an advantage. You'll be on your way to dividend investments. And like I said, you'll be able to do that by just clicking the link below. Give me a thumbs up. And I hope you guys enjoyed this video. Like I said, if you guys have any other ideas or anything like that you want me to, if you guys have any questions or anything that you want me to answer to you, I will do my best to answer them, or I will always find the answers to any questions that I always, you know, come across. So hope you guys enjoyed this video. Hope you guys enjoy. And like I said, if you're not watching these videos, and if you're not getting into dividend investing in 2020, you better get to it, because you want to invest, you want to grow your wealth, you want to grow your money. And like I said, I can help you with it. I'm not, like I said, in my opinion, I'll give you my opinion as to what to do. Again, I'm not a financial advisor, but I would love to help you guys as much as possible. And yeah, so hope you guys enjoyed this video, and God bless. Till next time, peace.